Good evening, good evening. Welcome to our live Facebook. This is your host here, Martin Wong from Martin TF Wong. And also, we are the Trade VSA SmartRobie software provider, and we're going to be here tonight to share with you a topic that may be very personal to some of the OD trader like myself too, on value investing. So tonight we're going to be talking about value investing, which is also close to my heart. For those of you who don't know, I actually started with value investing in the beginning stages when I was investing and learning, but over time I have changed the approach to the market right now, and many of you know, as of that now, I've towards moving more towards price and volume. What I have seen, and the greatest influence was also from Bill Vermine, one of my seafood too, and also not to forget Tom Williams, who taught me all about how the smart money are always been in the market in here. All right, so today will be on this topic, which is very could be very personal to you, is value investing date, and we're going to be examining really going back to few months, perhaps weeks, what has happened into the market in 2025, at least the first 5 months, as well as 2023 and 2024, whether value investing is still working as it is. So let's go on. All right. Now, of course, if you have any questions in there, feel free to ponder into the comment. I'll be happy to look into it. And I like to welcome our Trade VSA member, or as well as our VSA 360 member. Trade VSA is the first Malaysian digital investment advisor license holder, and we've been granted that. So we are able to provide buy and sell call through your favorite SmartRobie apps. So tonight's sharing we'll be talking about is value investing dead, or were there a change in the gear in motion? What has happened to value investing? And we'll be doing comparison scene between the value investing scene versus the Malaysian value investing scene. And of course, in the US value investing scene, the greatest investor of all time, Mr. Warren Buffett. We have to talk about him in here. And also we're going to talk about some of the lesson learned in here, and perhaps from the lesson learned, we can move to a hybrid model where value and growth at the right price, and then end with a summary. So that's what we're going to be talking about this evening. All right. So for start, I've talked about last week and was quite spot on the 14th of May, where we were at this stage. I think if you all remember that on the 14th, right, I did say that the market, if you go back to my previous slide there, okay, and I was talking about, are we going to what we call uptrend, breaking up above the 200-day moving average, or are we going to go back to congestion? And my answer was a sounding no. We're going to go higher, and one of the reasons why is also the seasonality in here. On the 14th of March, which was last Wednesday, came back, and there was a red pentagon in here, reflecting much earlier. So no surprises if you've been watching and listening to me on that portion that I've talked about, where the market will actually be going down from here onwards. So right now we have this base here, so we are likely to see the market being tested in here. We did have a bit of selling off too. All right. So one of the reasons why we cannot get away is because of this seasonality. Now some of you may have seen this. I'm going to share with you in here, so you're watching it. And in the month of May, this is where we are, right? So month of May towards the beginning of June, we generally have a very weakest month. So which still coincide what we have. So beginning of June will be likely to be the bottom, right? Which means the next green pentagon that comes out after June will be something you want to take care of, take notice of in here. Then we're likely to see that rally continue to June, July, and then we will peak probably in August before we have a sharp fall. So this is a scenario I want to paint to you so you're able to navigate successfully into the market, looking at the seasonal, the last 10 years on the FPM with the Pentagon Guider as a guide here. All right. So why value investing? Mourning for it. So this came out as the Berkshire Hathaway annual meeting, which normally happens on May in here. So he has officially announced that he has resigned as the CEO of Berkshire Hathaway, but still remain as the chairman. So did that signify as Warren Buffett officially retired? He's almost 95, 96 years old, right? So give the guy a break and let him retire, because when I first came into the market maybe like 15, 17 years ago, Mr. Warren Buffett was still the talk of the town. He was only around early 80s. Right now he's in almost to the closing to 100, as not as old as Dr. Mahathir, and you can see people like them are usually behind the scene, but he still promised to still run and give leadership in the Berkshire Hathaway scene in here. So it's also good that you all know what's happening to the greatest investor of the century. So in the annual meeting, which happened on the 4th and 5th of May, early this May 2025, he will step down as the CEO of the Berkshire Hathaway and will become leading only the so-called chairman. Okay, just the chairman part. So let me just move this aside, then you can see better. All right. So what has happened is that the Greg Abel will lead in his absence. Okay. So with the help of other leaders like Ajib Jain, which is from previous, I think was born in India, quite a diverse background in here, still running a lot of the philosophy of Warren Buffett in here, value investing in here. It's not really going to step over, but the Buffett advice to young investor during that conference of the annual meeting remain to be valid to young investor. I'm still young, if we look at it, study great teachers like what I did. I study Tom Williams and also Bill Vermeer in here, and as always we want to keep the emotion out of the market. I think many of you who are our member already knew that and done pretty well with keeping the emotion out of the market. The emotion is always the biggest obstacle when it comes to money wise, because it is hard earned money of us. So to put that money into the market, many people view that as a form of gambling. With the era of Trump 2.0, that definitely has become a lot of uncertainty. What will Trump do? But all in all, he is still bullish on the long-term US optimism. All right. So as such that he keeps a lot of cash. He has something like 387 billion cash. Last check on the annual meeting announcement that we had. So he only viewed 50% stock decline as an opportunity, not as a threat. Okay, so he expect market to come down 50%, but looking for what we have seen so far, the market did retrace back to the bearish market down to something like 23% decline that we saw when Trump launched the tariff way back in April. That was the low of the market. Since that, he retracted that. Even the long-term 145% tariff with the Chinese market has also been pulled back. Now it's back to 35% in here. So a lot of the uncertainty that Trump talks about 2.0 has been retracted back already. So this is where we are, and markets seem to be making another attempt to the old high that was achieved sometime in December 2024. Since then, when Trump came in, market has been steadily going down in here, and a lot of talks is on recession. Usually when market falls, that's the words that is usually going to be out, recession. But then we have seen this was rather untrue, and then the market came back up and go back higher than it is. All right. So if you look back at the US market, Berkshire Hathaway, if you have invested in Berkshire US, which I have actually, right, it has done pretty well. If you can see from here, which is the green pentagon way back to 2020, you can see year to date, anything that is below zero here, all right, maybe I'm just going to bring this up, highlight here, this will be the negative part, okay, maybe I'll just erase this. Yeah, this is the negative, right? And there was a small decline. Even if you hold it on, right, there was a small gain. Then you have a good gain around 20% in 2021, smaller in 2022, and of course we know 2022 where were the inflation. Then the inflation came in, they raised interest rate, and then the market fell. And then in 2023 it rebounded back. All right, we've seen another 18% up movement, and then it rebounded back. In 2024 was a good year, and so far in 2025 it is almost just under 20%. So even if you have gotten Berkshire Hathaway stocks as a mean of considering the value investing, you have done pretty well. Alright, Berkshire Hathaway in here, but unfortunately when you come to this kind of investing, many people don't have an appetite for long term, and they rather invest on things that is unsounded for and lose money instead, right? So these are considered one of the true and tested value investing in here, but I'm going to share with you why value investing in terms of Berkshire Hathaway B share, right, has done pretty well as opposed to the overall value investing team. There is a difference, and if you can spot the difference, that's pretty good. All right, so fact number one, all right, fact number one, if you look back, value investing has underperformed historically, because this is also due to the ultra low interest rate after the GFC, the global financial crisis. Interest rate has been pulled down. We all know way back in financial crisis 2008, 2009 with the CDO toxic loans that's going on in here, and the whole financial system really needed an overhaul. All right, and as such that the Federal Reserve came in and started to dump interest rate way back to almost close to zero interest rate, and since that has been the theme going forward, printing money, quantitative easing, and that has helped a lot of the growth stock that you've seen so far. So a lot of growth stock, the technology sectors, which I'll talk about, so fact number two, has done pretty well. And then there's also competing with value investing, because previously the theme was always value investing and the other one was growth investing. All right, so then you have also the massive what we call passive index investing, right? Now 60% of US stock holding has led to concentration of expensive stock, squeezing out value and small cap stock. That simply means that people are investing based on index or based on sector that you've seen. I'll show you on the next slide a lot in there. And also the S&P 500 has been heavily weighted, concentrated on a couple of stocks. You can see the weightage since then has been biased towards those have grown very well. If you had known that in 2023 was the Magnificent Seven, 2024 and then 2025 were the AI stock in play, which we will get onto it. So because of these three factor, the value investing has sort of been sidelined and failed to perform. All right, that's basically the bottom line is, right? So if you look at fact number two, which is the overall ETF, right? If you look at the value investing side up here, you have the IVW. Okay, IVW is the growth ETF, exchange traded fund, and then you have the IVE. Okay, IVE stands for the value stocks. So if you look back, going back to 2020, which is the yellow one here, right? Let me just bring this up here. I'm going to erase this. right? This one is the, okay, it's only 47% for the value stocks, all right, which is really, really underperformed. Now, if you compare to IVW, all right, that is the growth stocks, right, that has done very well for the ETF, right, and it's just short of XLK, which is the tech sector, okay, the technology sector for the US, all right, XLK. So it's a tech sector that's done pretty well. Those are your Magnificent 7, your AI stocks, your Amazon, Meta, and so on and so forth. All right. So with that in mind, you can see, going back to 2020, definitely the growth stock has outperformed the value stock. Then the question you might want to say is, why should we invest in value stock? Right? The reason for that, the reason is that they are waiting for the low interest rate regime, which is ongoing now, to normalize, which means it's going to be going higher. The longer the expectation of the US interest rate to go higher, then value stock will do better, because a lot of the tech sectors rely on future earnings, where the lower the interest rate, where the low interest rate are used to finance a lot of the project going forward. So with that in mind, is the expectation today is still going to be low interest rate, which we do see Donald Trump is asking the US Federal Reserve, Jerome Powell, to cut interest rate, and he said that he has to go as a cut interest rate. So with that in mind, the expectation of IVW will still continue to dominate compared to IVE due to the interest rate. Now if you compare that 2020 to the currency exchange, Malaysia Ringgit actually weakened, and the FEM's KLSE only made 4%. So why I want to show this to my Malaysian friends, those of you who are our VSA 360, it makes a lot of sense to be shifting your portfolio to the US market. And if you haven't been performing, right, you can see that this is the telltale sign why you should move some of your money from the KLCI into the US market. If you have done so, I think you have done pretty well in here, which has always been the motto of what we do here, is try to convince our subscriber, our SmartRobie users, and our VSA members to move your portfolio to somewhere where is a better return. Okay, now we did talk about the rise of the Magnificent 7, which you have seen that in here. 2024 was a really absolute boom all the way lah, not bust lah. You can see, with the exception of Tesla, that didn't do very well because of the onslaught of the Chinese EV, Apple, Alphabet, Meta, those are done very, very well. But because they become so popular in 2024, it became the main staple of investors. So investors only just want to buy these 7 shares: Nvidia, Amazon, Apple, Microsoft, Google, Meta, and Tesla. So as you all know, the more popular the stock is, right, according to smart money, this is where the returns diminishes. All right, because smart money usually want to buy things when no one is interested. When everyone is buying, how can the stock go higher, right? In this case, you can see Tesla, Google, Apple all has done still in the negative territory as of April, but right now we are in the month of May. It's coming back. Okay, so we will see a little bit of maybe turning positive for the remaining of 2025. Who knows? But do take note, a lot of the investors is already in this Magnificent 7 stocks in here. We have to see whether how well we turn. So keep an eye on it. Now also, reason number 2, R2, right, is passive investing. Now if you look at it, you can also buy the S&P 500 ETF, which is VOO. Now that doesn't require a lot of research and so forth. You're buying some of the best top 500 market capitalization on US stock. That is VOO. So it gives up since 2020 about 83% return for not thinking, and you're still beating the ETF S&P 500 for the value share. Now remember, value investing needs a lot of research. Later on, when we have time, I'm going to share with you how we can use a public screener, okay, a public stock screener to pick up some of the value and growth stocks in here, which I actually prepare for you. So I'm not sure whether you have time to do that or not. So in the old traditional value investing, you have to pick stocks. But with the passive index investing, why do I have to pick stock when I can pick the entire sector? For example, gold has been doing so well. You can actually buy gold ETF, right? GLD, and then you would have done pretty well. So as such that a lot of young investors coming in here, they do not favor the so-called analytic approach. They have to read a lot, and we all know young people, Gen Z, they don't like to read. So coming to that manner, they have to read and they have to see what stock to buy. That becomes very difficult. So ETF investing has become more and more popular because they pick the entire sector. So as evident from here, VOO has done very, very well. Then we have the rise of the AI stock in 2025, which in itself replaced the missing gap that was by the Magnificent Seven. Nvidia, right? Alphabet, Microsoft, Meta. Not all of them are here, right? Like Apple is not in the AI stock, but with the increase of the LLM model, okay, large language model, and the ongoing about AI, ChatGPT will replace the current existing workforce. Almost 20 to 30% has been the main staple media news feeding out there. So a lot of corporation has been encouraged to use AI in some way or another. Just recently I read on the newspaper, journalists in Malaysia are using ChatGPT to help them to do research and to write. And pretty much what I do today in this even presentation, I use ChatGPT or deep research like plus well-managed, financial stable company that is selling at a price close to a discount or net tangible asset value. So pretty much to book value lah. Okay, we'll use a value investing over market cap. So what they're trying to tell you, okay, from 20th of May 2025, caption one was Alan Tong, the owner of the Age financial newspaper, and with his research that has done pretty well. As you can see back on this side here, it has made about 17.7% return since the inception of 2014. All right, that's pretty good, right? And if you look back on Alan Tong, that's a picture of him here. He is one of the serve as an economic advisor for the Anwar, I think was it Anwar or the previous prime minister in here. So he's picked, and he has a company, a research company called absolutestock.com. Check it out in there. So he looked for a sustainable business model, improving productivity, strong balance sheet, and undervalued prices, looking at price over book value and price over PE. But what he doesn't tell you is, which I'm going to tell you, is he focus on small cap stock with good success compared to large cap stock. So if you want to do well, this is where you want to be focusing. Look for small cap stocks, because when the small cap stocks move higher, that's where you have the greatest wealth creation. Alright, so if you look back, going back to 2014, Alan Tong didn't do well when he picked small cap stocks. So same thing goes for you. So if you want to do well, you have to pick small cap value stocks, then you'll do much better compared to anything else if you're going to be falling. Now another case study which always been the big advocate of value investing education has been VIC College, which is based off in Singapore. They are a parent company of 8i Holding, and because they actually advocated value investing, they teach us value investing. I think some of the audience may have gone for that. I back in maybe 2018, 2019 up to 2024, but in 2023 they scaled back a bit. This is partly due to their two funds, the VI Quad US and VI Fund Asia, actually underperform compared to the index benchmark. I mean, if you are a big advocate of value investing and the fund that you manages right, didn't do so well, that says a lot about your methodology in here. So as such that they actually wind down their fund management and been very, very quiet since then. I'm sure you heard of this company called VIC College and the 8i holding in here. Now, we're also going to be studying why some individual who practice value investing, like Mr. Tong here, done pretty well. And then you got the local fund management didn't do so well. Same goes for this Singaporean and also educational arm didn't do so well. But third, very importantly also when you look at it, overall globally, right, the past 15 years, there were value growth stocks were outperforming. All right, only before 2024, as I said before, 2028 was a turning point where they have low interest rate. Right, the key thing is low interest. If interest rate is normalized back to 4 or 5%, then you'll see value will triumph. But we know that Trump on this second term favor low interest rate. So with the low interest rate, that means growth is likely to be stronger, will be the stronger brother in here. So if you look back 2008 to 2024, that was a growth of 907% return compared to value stock of 363% return. In 2023 and 2024, growth stock has rallied 94%, which we saw. The Magnificent Seven, then the AI stocks, those are your growth stock, tripling the return. The return of value stock, 3 times the return of the value stocks in here. Interesting. So having said that, please do not ignore the fact why you should be in. So coming to my summary in here, right, before we go on to the exercise, value investing remain relevant. But at the current period, based on the two conditions that I talked about, the low interest rate and the perception of the interest rate has keeping it low, has made the theme that growth stock will dominate. Now, if you buy back Berkshire Hathaway in top here, Berkshire Hathaway did as well as the XLK. XLK, which is the technology team here, 124, 120, 129, 124. Why? That was why, because Warren Buffett actually mixed growth. He had Apple stocks in his portfolio. That's right. In his portfolio, that has done pretty well and also explains one of the reasons why it did so well. So performance of value investing really differ. Now we have seen Alan Tong going into the small cap stock, done pretty well. Warren Buffett went to the growth stock. 8i value investing fund management as well. The local fund management like the Hong Leong Bank and Maybank has only have mediocre return. Partly this is because I believe they invest in large cap stock, which usually cap many of the big growth. So current US momentum is still ongoing, where Trump wants everybody to invest in the US market. So that will continue to drive the growth stock theme, which you every day look into the market. You have Nvidia driving a lot of the news and the AI sales. That will be the thing. So the turning point, if you are a value investing person, you want to mix growth, right, with Pentagon guided paying in there for your market timing. Like Buffett said in his recent annual meeting, Apple has made more money for him than his own company. All right, that says a lot as what we call a testimonial to the power of wealth creation from Apple in here. Now, for the remaining time, I want to share with you one stock screener you can use, which is the growth stock with undervalue factors. All right, and looking at volume, PE, revenue growth, market cap. Right, and it only produces about 43 candidates for the Malaysian stock. So what you need to do is going to TradingView, and you can watch this video recording again. So what you want to do, you put the market cap from 300 million to 1 billion. Right, that will be your first indicator, and you will look for PE less than 25. Then you want to look for volume greater than 50k, and you will look for revenue growth, where quarterly to quarter is more than 5%. So that means you're looking for growth share, but undervalue price. Yeah? Okay? And this is a list of 43 stocks in here. We have Alsawit, we have Pharma Niaga, we have EMCC, we have Southcorn, GDB, RGB, EcoFirst, QES, TH Plantation, and Muiba. So I just have a screenshot of this one in here, but if you go over to TradingView/screener, you can do the same. And I think you don't, if you are already a user using this, it's not that difficult. You have a screenshot of this, make sure you take a picture of this one and you create this list yourself. Look for those growth sector. And after that, you have done that, go over to SmartRobie, and we have this invest column here. That is the watch list. So you can set up the watch list there, and then when the green pentagon comes, you can just do the trading. Let me give you an example. So we have here, what I did was I sorted out by the cheaper share. You can see most of these are penny share. Okay, let's look at another one, which is TH Plantation. Okay, in the list here. So I'm just going to go on TH Plantation. So TH Plantation is actually green pentagon. Alright, there you go. That tells you a lot about this stock right now. Okay, which is already green pentagon. And right at the low base in here, it actually came off from the old high. And if you look back last year, okay, it performed very well, 46% return for TH Plantation. But this year has been down. Okay, this year has been down. Last year was really a performer. And we look at TH Plantation. Let's look at the metrics. Let's look at the financial here. Okay, and you can see it pays a 5.5% dividend and a PE of 8 times. That's not too bad. That's pretty good. TH Plantation, palm oil in here. So you are buying it at the very low base with a 5% return. How about that? Just picking up a growth. So, and it does have growth. Okay, how do we know we have growth or not? Let's look at the revenue over time. We can go to the revenue here, and you can see revenue is actually growing nicely here. Palm oil, 800, 700, 800 in here. Earnings, how about earnings? First, switch to annual earnings. Okay, earnings did drop 8 cents, 4 cents, 5 cents, and expected is also 5 cents in here. Okay, so that has been a bit of roll. Now we got it, Mohiba. Okay, so we have Mohiba on a chart here. It's been a downtrend. We have green pentagon, then turn back up to red right at the low base here. Okay, and the slow internet here. Okay, never mind. I think you can check that out. Okay, Mohiba is back here. So right now at the very low base, I think it's warrant to look at this. Let's take a look at the metrics. Yeah, we are back here. Okay, so 6 times PE. Doesn't pay any dividend compared to one, but it's only about 450. That's why we look for small cap. 450 million here. Very nice sweet spot. 450 million for Mohiba. They're around 485, 400, 300 plus. So you got room for it to grow. Okay, so that's my little tip to you. Hopefully you learn something and put it into your watch list. When you have a green pentagon, red pentagon, set it up. And remember, think of year, it's going to be a trading year, not much of a buy and hold. So by right, if you have got into those stocks, hold on, and if they have a nice gain to year end, I think that will be a nice ang pao for you. Important, understand the market stages, which I explained the seasonal month right now in here. Pentagon Guider, a trademark of our flagship product in SmartRobie. Make sure you check it out. And our campaign has ended with the SmartRobie. Don't forget to check out our homepage, Trade VSA, where all our Trade VSA trading bots are doing very, very well. Alright, so that is using a lot of Pentagon Guider as a return in here. And you might want to check out also our up and coming course that we're doing is a SIDC. If you need 10 points, 24th of June is the date. We'll be teaching you how to implement AI tools and insight to make decision in trading and investing. It's an online conference in here. All right, very low cost, 168 ringgit and 10 pound. And for those of you who learn, our premium membership is still ongoing, right? And of course, thank you to all our VSA 360 members for your great support in here. Don't forget to join our Telegram chat room in here. So hopefully tonight I explained value investing is not dead yet, but it's just that it has gone into sort of a sideline due to the condition that I talk about in here. All right. So don't forget to follow us in our YouTube channel in here. And that's all I have for tonight. Thank you for coming. Bye-bye.